Well, on the Goldman Sachs Growth Environment Index, which measures a mixture of economic and social development indicators, we've got Nigeria's score having nearly doubled over the past decade. Let's take a look at some of the factors to consider when looking at what's influenced that doubling and the positive sentiment that we're seeing emerge around investing in Nigeria right now.
Yeah, well, if you look at the composition of that index, it's looking primarily at political factors, technological penetration. It's looking at macroeconomic stability and in broad macroeconomic trends, as well as human capital trends that are helping, that create a conducive environment in general for investment in any region. Notably, Nigeria has moved up on that list, but it's, I think, a direct result of a lot of the policy reforms which have taken place over that period, as well as some of the macroeconomic strength which we've seen. I mean, recently we might have had some weakness, especially in the financial sector, in view of the banking crisis, and in line with the global financial crisis, there might have been a slight pullback in investment in Nigeria. Notably, we estimate that foreign direct investment has dropped to about $6 billion per year in Nigeria. But overall, the strength of Nigeria's economy and the improving reforms, especially on the political front, are just making an increased case for Nigeria moving up on that list.
What are some of the potential political headwinds that the country faces that you're taking into account at the moment, if any, at this stage, that could influence market direction?
Well, as you alluded to earlier, the People's Democratic Party just screened 3 candidates, which include the president and his main rival for the presidential ticket in the party, the former Vice President Atiku Abubakar. For us, in the near term, the successful conduct of the PDP presidential primaries should be the main indicator, and in the longer, in the slightly longer term, we would be looking at successful elections in April to give us an indication of exactly what's going to happen with markets. The expectation right now is that if we have a violence-free and credible election where a clear winner emerges, that should be good for market, because it will help to give a clear direction on policy going into the next 4 years. I think the other thing is that a lot of investors have kind of sat on the sidelines, are going to sit on the sidelines in the first part of this year, waiting for some resolution to the elections and the transition to power for next year, until they actually make investment decisions. The reality is that I think it might be a bit short-sighted to make investment decisions at this time when there isn't really, especially larger investment decisions, where there isn't a lot of clarity on what's going to be happening in terms of policy going into the next 4 years. Obviously, if the current president remains, there will be a lot of continuity in terms of policy right now, especially in light of the Vision 2020 ideals. But then if there's a transition to a different president, we might see a situation where some of those policies might change. I mean, Mr. Atiku Abubakar, who's the main opposition candidate, has come out and absolutely said that he's not in agreement with the president's current budget and will do what he can to review it if elected president. So these are some of the things that might influence policy going at least into the next year, and the next 4 years. So these are just things that we're looking out for.
Is there a distinction to be made between the kind of involvement we're seeing from the foreign investor market and the local investor market? Because we know that a figure that came through on Monday was quite surprising to the upside, where we had purchases by foreign investors rising 88% on the NSE.
Well, I think there's 2 ways we could really see that situation. The first of them is that after the market declines in 2008 and parts of 2009, the retail investor, who was really the driver in this market, has been slow to come back. As a matter of fact, we've seen a lot of local institutional participation, but we still notice that there's a softness in the retail market and retail investor coming back. The other way we look at it is a situation where if you look at developed markets and most of the major emerging markets, which had quite a decent run last year, you're looking at those markets trading at about 16 times earnings as it stands. Now, compared to Nigeria, where a lot of the larger sectors which foreign investors are participating, notably the financials, are trading at a significant discount at about 10 times earnings. With significant upside with the introduction of AMCON and the clearing of the NPLs, it just really makes a case for investing in Nigeria. The reality is that frontier markets are becoming an increasing part of the global investment portfolio holdings, and I think the reality is that with the 7% growth and only expected to rise going forward in Nigeria in terms of GDP, we're just going to have to see markets continue to play, foreign investors continue to play an active role in our markets.
Within those realities then, Mandela, I mean, let's take a look at some of the troubled banks in the region, because on the back of the news that we heard out of AMCON yesterday, we had Oceanic, Intercontinental Bank, PHB and WEMA all rising more than 4%. How are you playing amongst those rescued banks right now? Are you seeing value opportunity there?
Well, at the moment, we're not playing in the rescued bank space. And the reason simply is that we need further clarity on what exactly the impact of these bonds received from AMCON is going to be on their long-term ability to generate profits. Now, I think the monies received from AMCON, in the case of Oceanic Bank being about 200 billion naira, in the case of Intercontinental Bank, 146 billion, will go a long way towards pulling back and erasing some of their bad debt positions or their negative equity positions. But at this time, we do not know clearly how those grants or those NPL buyouts will affect their balance sheets. Now, we're probably going to be looking at the fourth quarter or full year results to get a better sense of what's going on with that, and to get a better sense of what the liquidity position of those banks is. Because the reality is that even though they're getting bonds from AMCON, we do not know the direct impact on liquidity, which is actually the basis for on-lending in the long term. So until we kind of get some clarity on those factors, I'm investing in those banks and taking positions on them might be at best speculative for us at this time.